Hello friends, welcome to my channel Stock Market 123. I'm Shailesh Shetty, your stock market coach and professional trader for 17 plus years. If you like my video, please do like, share, comment and subscribe to my channel for more people to benefit from it. Today we discuss how do we select good quality stocks in our portfolio. To understand better, let me tell you a story. During the December school holidays, I was teaching my teenage daughter Shami about stock market. Shami asked me, "Dad, what's a stock?" This is what I told her. Let's say you want to open a cake shop and the cake shop would cost you 10 lakh rupees to set up and buy materials, and you have rupees 5 lakhs. So now you go to dad and say, "Dad, I want to open a cake shop. I need 5 lakhs more." So dad says, "Okay, I'll give you the 5 lakhs, but I need a partial stake in your cake shop." If you agree, dad and you are both 50% owners in the cake shop. Continuing further on our story, let's say we divide the entire value of 10 lakhs to 10,000 parts. Each part is worth rupees 100 rupees. This part is called a share. Now dad and Shami each own 5,000 shares at rupees 100 per share. Assuming the business makes rupees 50,000 per month, quarterly revenue will be rupees 1,50,000. Let's say the operating expenses is rupees 30,000 per month. The quarterly expenses will be rupees 90,000. After deducting the quarterly operating expenses from the quarterly revenue, we get a gross profit of rupees 60,000. Assuming no interest, no depreciation, and paying the taxes rates at 25%, the net profit comes to rupees 45,000. Therefore, the earnings per share EPS will be rupees 45,000 divided by 10,000, which is rupees 4.5. Now that we have an understanding of the basic parameters, let's look at Screener.in. So Screener.in is a website that helps us to shortlist of good companies using the queries. So here I am on the Screener.in screens. Clicking on screens, it will show you create new screen. And create new screen will bring up a query board where you can type your queries. Now I already have some predefined criteria, so we'll just quickly go through that. So the first parameter is market capitalization. Market capitalization is the price of the share multiplied by the total number of shares. So that should be greater than 500 crores. So this is basically to shortlist small caps, large caps, and mid caps in our portfolio. The next parameter is average return on equity for 5 years has to be greater than 20. This average return on equity is nothing but how much money the company is able to generate based on the equity that has been deployed. Sometimes you can also use the return on capital employed, which basically includes the debt as well. So the next parameter is debt to equity less than 1. So in this case, the company's debt has to be less than the total equity of the company. So that's why we have this parameter. The next parameter is interest coverage ratio greater than 3. So which means that the profit is able to cover at least in 3 interest payments. Next is profit growth for the company has to be greater for 5 years has to be greater than 20. So basically, if the company is growing at 20% for the last 5 years, that is a high likelihood that the company will continue to grow the same way, and the stock price also would continue to increase. The next is the PEG ratio. The PEG ratio is called as the price to earnings growth ratio. So it is nothing but the PE, the price to earnings, divided by the growth. So if the PEG ratio is less than 1, which means the PE of the company is lesser than the growth rate. The next 2 parameters are basically the technical parameters, which basically ensures that the company is an uptrend. So here it basically means that the price is above the 15 DMA and the daily moving average and the 200-day moving average, and the 50-day moving average is above the 200-day moving average. So also we need to ensure that the promoter's stake is more than 30 to 40%, which basically ensures that the promoter has the skin in the game and is interested in generating profits for the company. Also, the pledged percentage by the promoter has to be less than 11%. Now, before we progress ahead, I would like to make a disclaimer. I'm not a SEBI registered advisor, and any decision to invest in any stock should be done after your due diligence. But this query does show some good quality stocks, which is proof that our screener criteria is quite good. That's it for today, folks. Thank you for listening. We learned today what a stock is and how to choose quality stocks in our portfolio. If you are new to the stock market, please do watch my first video, Introduction to the Stock Market, here. If you like my video, please do like, share, comment, and subscribe to my channel for more people to benefit from it.